Hello, this is Terence Baker, news editor, Europe, Middle East and Africa. Welcome to you all. Thanks for listening again. It's a pleasure to have you on board. Once a month, we try and get this podcast with all the news from Europe, Middle East and Africa in the hotel ownership, development, acquisitions, mergers and acquisitions, all the wonderful stuff we love about this industry. Really, really great to have you on board. I'm here with producer Patrick Skillicorn, as always. He and I have patched up our differences stemming from Premiership football. It always seems to stem from Premiership football, with his totally incompetent Tottenham Hotspur surviving on the last day of the season by winning 1-0, and my even more incompetent but still beloved West Ham United falling into the Championship next year. But we have patched up our differences to do much more important things, such as this podcast, The Upgrade. You are most welcome to be here. I'm delighted today to have as my guest Matt Lederer, the recently appointed Director of Acquisitions at the Sirius Hotel Group, which was formerly Resident Hotels and originally, back in the day, Nadler Hotels. It's a private company under the ownership of family office McTaggart. Matt Lederer, welcome. How are you?
Very well, thanks. Thanks for having me.
Oh, it's my absolute pleasure. Now, let's start we often do with our guests. Give me a brief indication of your career and what your initial thoughts are coming to Sirius. As you say, you've been here a month, maybe a month and a half.
Yeah, well, my career started, like many of my colleagues in the industry, at JLL. So I was there for 10 years down at Warwick Street. Great business to be a part of. Lots of great people, interesting mandates, significant client base. From there, I actually ended up on the brand side with Marriott International in the UK. So from a development perspective, looking at growing the select service brands in the UK, and at that point, so pre-COVID, 2018 to 2020, that was sort of Moxie, Courtyard by Marriott, and Residence Inn predominantly, and that was all predominantly franchise-based growth. As COVID hit, I got to know the guys at Castleforge, which is a UK private equity real estate business. Joined them actually towards the end of the first lockdown, so it was a case of laptop and phone in the post and all virtual, but got off to a good start there and built a hotel portfolio sort of through the tail end of COVID and out the other side, executing a sort of value add business plan across UK assets, financing them, refinancing them, all that good stuff. And all of that led me, as you say, most recently about a month and a half ago, to the Sirius Hotel Group. I'd known David Orr, the CEO, for a long time. Their growth sort of aspirations, given the size of the business now and where they want to get to, I think is an exciting place to be. And yeah, just been about getting feet under the table and getting the word out there and building a pipeline for growth.
Excellent. And David Orr, CEO, as you mentioned, is a good friend of CoStar News Hotels. So your experience seems very multifaceted. You have a consultancy, you have a pure hotel play from a major global brand, the largest. You also have capital and the private equity, so a real good scope. Your education, was that in hotels or was that in something completely different?
My formal education wasn't. So I did a management studies degree at university, but I, like a lot of people, I suppose, in the industry, had family members in the hotel space, actually on the operational side. So it was always something that sort of I felt a pull towards, and on finishing university, I found my way sort of back to hotels, if you like, through the real estate side of things, and like I say, JLL, as opposed to I suppose the operational side.
Excellent. Now, so almost as young as your commencement at Sirius is the Sirius Hotel Group, Sirius Group name itself. Is that a strategy to slightly create an umbrella and not have resident as for parent brand and your main hotel brand. Tell us a bit about the thinking behind that name change.
Yeah, you touched on it very accurately there. It was really about positioning the group for that growth I mentioned, and also, as you say, uh, allowing for potentially multiple brands under one umbrella and one operational opco. And uh, with the acquisition of a portfolio the McTaggart family and partners made in 2022, we then again were operating assets, but not under the Resident brand. So it felt, I think, all in all, the right time to rebrand and be ready for the next 5-10 years, where obviously we hope to take the portfolio from 9 hotels now to 30 plus in that sort of time frame.
And it's never easy to create a brand. I mean, the idea, I guess, is for Sirius to be a quieter brand, if such a thing exists, while still pushing for resident hotels. And we'll get on to a bit later your franchise opportunities.
Yeah, it's you're right, and a lot of hard work has gone into to getting the Resident to where it is today. A lot of people who are unfamiliar with the brand are surprised, I think, sometimes to hear that the 3 London assets, for example, are numbers 1, 4, and 7 on TripAdvisor for all of London, which I think is incredibly impressive, to have the 3 London assets in the top 10, and particularly when some of those assets, they're in great locations, but the nature of the business being minimal F&B, rooms driven, a lot of people probably walk past them without really realizing there's a hotel there, and I think that's fine, particularly when your reputational scores are that high, and reputation forms an important part of that brand, as an independent, right? So you don't have that sort of firepower of the loyalty systems and such for the franchise side of things. So yeah, it's hard work, but I think when it works, and as Resident does, it works well, and it can drive high profitability and great returns for owners.
I'm not going to put you on the spot, and my astronomy knowledge is terrible. But Sirius, is that the Northern Star? Or North? Is that?
That
It
is
is the North Star, isn't it? It's the one the sailors look at
that,
on.
that's correct. Yeah.
And of course, Edinburgh being sort of maybe your spiritual home at Sirius. I mean, that's obviously farther north than London.
Yes, it is. Yeah, and another great hotel market.
It's our second world-class city, isn't it, in the United Kingdom? I mean, no disrespect to Manchester or Birmingham, but Edinburgh, it's a fantastic market.
Yeah, certainly from a hotel perspective, significant domestic demand, an ever-growing international demand, um, and of course that makes for significant compression, particularly during the peak season. Having said that, I would argue that probably since in the post-COVID era, that season has got longer. I don't think it's you clearly still get that sort of 2-3 month spike, but that shoulder period is much stronger for longer, which is great. And yeah, we've got two properties there, both trade incredibly well, and yeah, long may it continue.
Yes, indeed. And I mean, I should add world-class cities in terms of investment grade attraction rather than anything else,
Yeah.
music or
Yeah.
whatever it might be. Let's talk about we'll get back onto the resident hotels, but let's talk about your franchise business. One of the reasons you've created Sirius to be an umbrella, to have those owned and operated hotels, as well as the 4 Points Flex by Sheraton brand. How did that relationship come about, and what is the strategy there?
So, as you mentioned, that the Sirius business is owned by the McTaggart family and partners. They acquired the Sleepers hotel portfolio in 2022.
I remember it, yes.
So that was 4 assets, 4 regional UK assets, in great locations. So that deal went through 22. I think rightly the business spent some time getting to know those assets, maximizing kind of what was there. and sort of dual tracking that was to start looking at, well, how, what's next for those assets? Do you keep as is? Do you look to grow essentially a second independent brand further, or do you look at the major hotel brands and their, I guess, probably conversion brands for a fit that might benefit those assets? So, long story short, having gone through that process, the team landed on the 4 Points Flex by Sheraton. And that, of course, gave those, once the rebrand was carried out, access to everything that a Marriott brand brings in terms of the system, the Bonvoy loyalty program, which is now, I think, over 200 million large. So, if you like, that sort of creates the superpower for that particular portfolio, which is slightly different to the resident, and some of the points I mentioned earlier for that. And the idea, I think, would be to do more of those in the UK. We think there are probably 20 plus regional markets that brand could go into. It's an attractive brand from a conversion perspective because, again, it's a fairly sensible approach to brand standards, depending on your starting point, clearly, of what's there and the condition. So, you can make that step from starting point A to 4 Points Flex, and the door is open and the sign above the door in relatively good time, which I think is also attractive. So, there's the potential to turn a business quite quickly while producing income, and I think that's always a positive for returns.
How important was it to get into a brand that hadn't had scale or footprint in Europe or United Kingdom to a brand like that? There's probably one or two different choices you could have made.
Sure.
So why this brand, and how important was it to get your foot in early in a brand?
Yeah, I mean, certainly when you're early into a sort of a brand and its growth story, that can be beneficial from a sort of commercial perspective. I think you also benefit from that initial push that the franchisor will be giving that brand, from a sales and marketing perspective and a profile perspective. And I think really it's about fit. The starting point was that portfolio that had been acquired. So it's trying to balance, I think, CapEx costs, program time, upside potential on the other end, marrying the sort of vision for how hospitality should be delivered, I guess, in that space as well, right? Because Marriott will want their guests and loyal Bonvoy members to be well looked after, and that's certainly going back to that sort of reputational point for, albeit on the resident side of things, and how important that is in an independent brand. I think it plays a big part also with just operating under a brand in that sort of franchisor or franchisee relationship.
So excuse my ignorance, but how many hotels were in that Sleepers?
There were 4.
There were 4.
Yeah, so Edinburgh, Dundee, Newcastle, and Cardiff.
And Sleepers no longer exists as a brand name, does it? I'm not particularly keen on words that have Z in place of an S at the end of a name. It shouldn't be encouraged. I'm very happy that you got rid of one. What is the relationship between the 4 Point Flex brand under your portfolio and resident hotels? Doesn't sound like a would be one, but is there?
Yeah, I mean, relationship insofar as
ownership.
Yeah, and the operating company. So the people team at HQ who look after the resident teams and people in those assets, and that business look after the teams at the 4 Points Flex assets in that portfolio. And I guess taking a step back, there are some common points between them, I suppose, when we think about where we operate best, and that's, they are both city centre, they are both rooms focused products, very minimal F&B, which I think is fine if you're in the right locations, right, where you're surrounded by food and beverage options, and people can make their own decisions. So there are some kind of common themes to both brands. You're just operating in a slightly different part of the pyramid, from a
But
brand.
we're not going to see Resident as some sort of guest company on Bonvoy. Possible.
Good question. Not
other companies.
It's a fair point. That's not in the sort of works, and that's not something necessarily that's been tabled previously.
So Bonvoy, loyal Bonvoy clients, customers, guests may not be aware of you at all as Resident.
That's fair. Yeah. They won't be. So they won't be receiving Marriott marketing materials mentioning the Resident. No. So
it's a perfect opportunity for you to use both sides of your brain, isn't it?
Yeah, exactly. And also while sort of maintaining a sort of owner's mindset to operations as well. So yes. I think the fact that we currently operate the estate on behalf of the McTaggart family and partners, and there are existing partners sort of within that ownership mix, and it's a very close relationship. So I think that's another important piece of this is operating with that owner's mindset. If there's CapEx required, you're taking you're typically taking maybe a slightly longer term view of things, but that does allow you to maintain that reputation. It does allow you to build sort of credibility for those individual assets in their individual markets, whilst also increasing the value of the portfolio, the brands within the portfolio, and the operating company
portfolio, which is investors very much like. So let's talk about Resident. It's obviously slower to come. Any new assets slower to come to market. You got to be city centre. You've got to be in, I imagine, a vibrant community of restaurants and attractions, etc., etc. You have your London one, you have your Edinburgh, you have what else, don't you?
Liverpool. Yeah.
So
well remembered.
So, what's the strategy there in terms of, do you have a timeline, numbers, or is it just slow but slow? You got to really wait till you get the right product.
Yeah, I think your comment is fair. With what that brand is, and where it works best, you do have to be very discerning, I guess, in terms of the location that you're willing to go to. We're in Covent, using London as an example, we're in Covent Garden, Soho, and Victoria. To your point, vibrant neighborhoods, lots of options from a food and beverage perspective, lots of things to see and do. The locations that people want to be in, and teams that are very well plugged into that local community, can make great recommendations, can look after the guests while they're there, and that all works really well. If you were to go slightly off pitch, I think it becomes an issue. So yes, I if you were comparing the two sides of the portfolio, the Resident and the 4 Points Flex by Sheraton, I think the growth on the Resident side could inevitably be slightly slower. I don't think that necessarily means slow. It's just you're not going to be looking at quite as many conversion plays where it's a 3 to 6 month capex and rebadge for a 4 Points Flex. Inevitably, it's going to take longer. If you're looking again for the Resident, where we're probably in the UK looking at only a handful of markets, I think you have to accept that there might be some slightly heavier lifting to do. So you might be doing, as we did in Edinburgh, office to hotel conversion. You might be doing like we're about to go on site in Farringdon and ground up for a Resident. So that inevitably takes a little bit more time. It's not to say we couldn't do a hotel to hotel conversion for resident. I think that's something we need to um, get comfortable with, because inevitably you don't want to kind of completely close off that route.
So it's a new building Farringham.
Yes, yeah. It is 1-8 Long Lane. I think it's the address. So it's 2 office buildings that are owned by um, the McTaggart family, and they got planning permission relatively recently. So just in the final sort of throes of
Excellent.
dotting the I's and crossing the T's, so to speak, before being able to get on site on there. And that's 128 keys.
Brilliant. But as you say, for other cities in UK, you've got to be discerning. I mean,
Yeah, it's not going to work. It's not going to work everywhere, and that's fine. I think it's then a case of looking outside of the UK and looking at Europe. So you start looking at key gateway cities in Europe. Amsterdam, Paris, Barcelona, Madrid, Copenhagen, etc. And those are all cities where you could see a similar dynamic that works so well in the locations we're in
is
the
that
UK.
a 10-year time plan to get some of those hotels? I mean, never say never and don't say when.
Yeah, no. Well, I suppose. I think it's been said already. I think the aspiration is to get to 30 hotels in the next 5 to 10 years
Across both.
across both. Yeah, as a group. So, as I say, and that will be a blend of I think some of the 4 points flex stuff coming online quite quickly potentially, and then adding sort of accretive sites to the resident portfolio.
And 4 points by flex, of course. Ones, I mean, it's not necessarily your decision where those would be. I mean, Marriott are working with you on that. And,
Yeah, exactly. It's always a very close relationship, I guess, between franchisor and franchisee, or you certainly hope it is. They are very keen to grow that brand. We've seen it work, obviously, firsthand with the assets that
you have
that we
master
manage.
franchisee kind of relationship in some markets or not? It's case by case.
It's case by case. I mean, we're obviously in relatively early, as are some others who
relationships or
who build it. And yeah, exactly. It's a relationship that builds over time. Hopefully, you deliver for the brand and are a good franchisee. You get the support that you need from them. They're making them a good franchisor, and everyone wins, I guess, hopefully the idea. But yeah, so we will come across opportunities and run it by them. And on the flip side, they will come across things that they think might work for the brand. But, look, they're not going to buy the real estate. They're not going to, right? They're not their asset.
So you evidently feel comfortable about opening, say, a 4 points flex in Brussels or
yeah, I think first, I think initially there's a lot to potentially do in the UK and sort of home market, so to speak. Like I say, there's probably 20 towns and cities in the UK that you can imagine a 4 points flex going into very, very easily. I think there are a lot of hotels that potentially underinvested, going through changes of ownerships, and those I think make perfect candidates for that play.
Indeed. Let's talk about operations. How are you seeing things like procurement and supply chains and I mean costs increasing, pushing them onto the guests perhaps, or absorbing them some yourself? AI back of house.
Yeah.
I mean, it's very complicated at the moment, and it's a thin line to tread.
It's really. I won't be the first person to say this. It's really tough. This year is certainly tougher from that perspective than last year. Won't get into the politics of it, but that there are some big swings in the P&L, depending on how your business is structured and the kind of operation that's being run, and that is painful. Yes, there's the potential. You will try. Everyone will try and make sure your top line is as strong as possible. But the market will dictate in quite a few situations and circumstances. And there's also a balance to play, isn't there? I think, you when costs get a bit higher, the temptation is to slash costs quite hard, whilst to your point, also trying to max out your top line. And that can sometimes work for a brief period of time. But more often than not, you start feeling that from a guest score review perspective, and then it's a sort of slippery downward slope uh, over the sort of medium term. So it's really about, I think, being balanced in the approach, being as proactive as possible, reviewing rotas, operating procedures, reviewing, whatever utilities contracts you have in place, depending on how you're procuring that, getting in early to appeal your business rates, and focusing on what you can control. Because at the end of the day, we as an industry aren't going to be able to control what Donald Trump does in the Middle East or how that pans out, which of course is having an inflationary impact. So yeah, it's tricky, but we're fortunate insofar as I said before, being rooms driven without much exposure to food and beverage. It's quite a compact team to operate those assets, both on the resident and the 4 Points Flex side. So our starting point is a higher probably than average margin anyway. So whilst it is painful to see that eroded slightly, it's from a sort of high starting point. So there's comfort in that, I guess.
I mean, for a resident being at the top end of the segmentation, that demand, upper upscale luxury, hasn't eroded. There's still money being spent.
Yeah, I think so. And I think it's interesting as AI becomes more used for people's sort of booking journey and decision-making process, that reputational piece that we focus so much on, particularly, on both sides of the portfolio, but particularly with resident, I think becomes even more important, because you're right. I think there is still money to be spent there, and people are still traveling. People are still in that sort of, I want to protect my experiences and my travel, and I'll probably make sacrifices elsewhere before doing that, which is great. And obviously means people continue to travel. But of course, people, regardless of the price point, are going to be a little bit more discerning, because, those are hard-earned pounds, euros, whatever the currency. And you want to make sure you're getting value in whatever segment you're traveling in. And I think that's the kind of balance we try and strike.
I mean, we're sitting here in the middle of 6 or 7 a week of absolute glorious weather in the UK.
Yeah.
It might put us into a false sense of security, but you see staycations growing this year in the UK. I mean, even from what we've spoken about before, money being a little tighter, Middle East, US-Iran war, and that kind of thing.
Yeah. Yeah, I think so. I the sort of whole potential jet fuel shortage, a bit of uncertainty there, I think will inevitably, I appreciate it's not a barometer for the nation as a whole, but just having some conversations with people I know, there are some people who have already booked some UK stuff,
right.
Just so they know what's happening, essentially, so they can be kind of in control of their own destiny when it comes to getting their break, whether that be up to Scotland or the southwest or wherever else. So yes, I think instinctively I could see more staycations this year. I mean, you only have to look actually in towns. We're obviously in half term at the moment, aren't we? And it feels relatively busy with families and that half term crowd being out and about. But I think, international demand, you'd like to think will remain strong. UK is an attractive place to visit. There are interesting cities. There are interesting things to see. There is still a big downturn in terms of US inbound. Inbound into the US.
Yes.
So, they're down, 4 million, I think, last year in terms of visitor numbers. A percentage of those travelers will look to go elsewhere. Now, how many are then Europe, and then how many from Europe or the UK? I don't have an exact number on, but just instinctively, again, you feel that there's potentially a win there for the UK sort of PLC, if you like. So yeah, again, staycations, yes, I can see it. But I can see, depending what happens in the Middle East, I can see international actually coming back towards, the tail end of the year, in a sort of more major way. I think in all of this, I think lead times might be quite short, which in itself is
Increasingly so.
which in itself is a bit of a challenge, and probably requires the industry to sort of try and hold its nerve as much as possible when it comes to pricing and rates, because the temptation, of course, when looking at business on the books, and it's getting closer and closer, is to start perhaps dumping rate a little bit, or not dumping, dropping rate. I think, I think we probably collectively need to just be brave on that at times, because quite often dropping rate just leads to selling those same rooms, but just albeit at a lower rate. It doesn't instinctively feel like the right way to go. But it's a tricky one from a revenue management perspective, because I think the lead time will be very short.
And fear for inbound US travel, and we've written about this extensively at CoStar News Hotels, is around the World Cup. Hoteliers there are already complaining, but they're not seeing the numbers. A huge expense. Even football fans have a limit. Secondly, the supposed lack of welcome that some people are expecting, even if that's not the case at all. Some of these things might have people staying in Europe. It's every possibility.
It's a natural flow, I suppose, isn't it? I think, and yes, that pricing point you made on the US and the World Cup, I think, is something everyone needs to be a little bit mindful of. Regardless of what segment of the market you're in, people will inevitably have a limit, and I think at times those limits are being reached.
Well, maybe Scotland went to, because they reached the World Cup the first time for a while. Maybe the proud Scots, they love their nation and their football team.
Yeah.
Are you got a holiday vacation plan this year? Where are you off to?
Oh, I'm actually staying in the UK in the summer, so I'm going to the Isle of Wight.
I've not been there for years.
Yeah. So lovely place.
Yachting?
No, just.
I think Blackgate Train's gone, isn't it? Remember that fun part?
Yeah, it's no. I think it's still there. Yeah. Okay. So I've got relatively young kids, so things like that, the beach, the water, just change of scene, really. But yes, not having to jump on a flight and just throwing everything in the car. So.
And the ferry, that's a bit really. It's not a very long journey, but it's a sense of adventure, isn't it? Going from mainland to an island.
Yeah.
My wife Francesca, she's Italian. We're off to Naples in a few weeks, then went to a little island called Ventotene.
Mm-hmm.
But I guess that's going home, really, because we're Italian family almost.
Very nice.
So, lastly, how confident are you for this year, for your brands, for your business, for the general industry?
Yeah, I think hospitality is an incredibly resilient industry, and it's shown that at lots of different sort of junctures over time. COVID most recently, everything that's happened, I guess, since COVID, and I think that will continue to be the case. And as I say, you can only control so much. So, and sometimes it's about, I guess, just focusing in on the fundamentals. And if you can deliver for the guest, and have a great reputation, you would like to think guests will come back, new guests will come, and you can run a profitable business for your owners and investors. But yes, in doing that, I think you just have to be as proactive as possible. And I think I think there's I think there are good times ahead. I think, like I say, the next generation coming through are probably even more defensive of their sort of experiential spend than previous generations, and that probably all bodes well for the industry as they inevitably progress their careers, make more money, have more disposable income. It all flows through. So I think lots of people have been using. It feels like people have been using cautiously optimistic for a while, but
since I started.
but I think that is probably still the sense that I have when looking at it. And
maybe we're not cautiously optimistic anymore. We're optimistically cautious.
But well, we'd have to get into what the exact differences that might be. But yes, I think yes, similar sentiments.
Well, I think these are sentiments shared by a majority of people I speak to in the hotel industry. Matt Lederer, Director of Acquisitions at the Sirius Hotel Group, thank you so much for your time. Fascinating conversation. I wish you and the company all the best. And thank you, listeners. As always, keep subscribing and adding notes and comments and CoStar News Hotels. We'd love to hear what you're doing and what you would like to see in our pages. Thank you for your time. We'll see you next time on The Upgrade.
Hello, I'm Luke Haynes, People Newsletter Editor CoStar News, and the host of Top Credentials, a monthly podcast exploring the colourful careers of those working at the top of UK commercial real estate. In the episodes, we discover the valuable lessons influencing the daily decision-making of property sector leaders, and hear about the aspects of their job that make it a little easier to get out of bed each morning. We'll also ask for their views on the latest news and policies shaping our constantly evolving industry, and even get them to share a famous quote or song title they think defines their career or the profession. Listen on Apple Podcasts, Spotify, or wherever you get your podcasts.
This episode of The Upgrade was recorded on May 27th, 2026 and edited by Sean McCracken. Visit costar.com/hotel news for more of our coverage and find all of CoStar News Hotels' podcasts on Apple, Spotify, YouTube, or your platform of choice.